FHA does not stand for first-time home buyers. It stands for Federal Housing Administration. It's a government-backed loan that's used to help people with less than perfect credit or who may not have as much money as someone who can do a conventional loan. So FHA loan typically requires you to put down between 3.5% to 10% down payment. Conventional loans, you're looking at 5 to 25% down payment of the sales price. Scores can be as low as a 500 for an FHA loan. But remember what I said, if your scores are that low, you're typically going to have to put down more money and your interest rate may be a little higher and you may be required to show 6 months reserves. Not all the time, but sometimes. One thing about an FHA loan that's really, really great is that the seller can pay 6% towards your closing costs. Some people call it seller concessions. Some people say, hey, the seller's paying 6%. When you get a seller that can contribute towards your closing costs, sometimes you can leave the table without even paying anything to get into a home, especially if you can get a down payment assistance program to go with the seller paying 6%. FHA, your credit does not need to be perfect. How do I know that? I can tell you that I've used an FHA loan before on a property in 2020. I had an old repo on there and I was still able to get that mortgage with a 2.75% interest rate. Now,